Welcome back to Explain the Charts. Today, February 12th, 2025, we're tackling Tesla stock, and we're looking at both the news and the charts to get a complete understanding of the market's current state. Recent news suggests a mixed outlook for Tesla. While some analysts point to Elon Musk's OpenAI bid as a potential distraction and a factor in the recent price decline, others maintain their bullish stance. The recent price drops of Tesla stock, down nearly 18% since the presidential inauguration and currently at its lowest since late November, create both opportunity and concern for traders. However, this drop is also creating a potentially promising buying opportunity for long-term investors. Let's now shift our focus to the charts, starting with a look at the overall daily candlestick pattern of Tesla. The one-day chart reveals a recent period of consolidation. After a significant drop, the stock price appears to have found support in the $170 to $180 range. This is evident from the recent low of $175, followed by a strong bounce upward toward the $200 price point. However, whether this is the beginning of a long-term upward trend remains uncertain. Looking at the one-hour chart, we gain more insights into this recent price action. We can now hone in on a specific section of the one-hour chart. Focusing on the recent price action from the past 24 hours, specifically the period from February 11th, 2025, at 1700 hours Universal Time Coordinated to February 12th, 2025. At 1700 hours Universal Time Coordinated, we see more clearly that the one-hour chart highlights short-term volatility, characterized by frequent price swings. These oscillations indicate that traders are actively engaged in both buying and selling actions. This short-term volatility isn't entirely unexpected for a volatile market. But we must also note the significant upward momentum that could be a prelude to a more sustained upward trend. Observing that the price managed to stay above the $180 support level adds credibility to a bullish scenario. However, the absence of a clear upward trend on the daily chart tempers our enthusiasm. On the 15-minute chart, we can observe even more minute details in these short-term movements. This 15-minute chart shows us what was happening in the recent 24 hours, more specifically, the period from February 11th, 2025, 1700 hours Universal Time Coordinated to February 12th, 2025, 1700 hours Universal Time Coordinated, revealing short-term price fluctuations. We can clearly see the intense trading activity and how quickly the price swings, illustrating market uncertainty. Short-term movements are clearly apparent, but the lack of a defined trend necessitates that we monitor this closely. Let's take a broader look at the one-day chart once again to observe whether any major support or resistance levels could be anticipated in the near term. Returning to the daily chart, we see that the $200 level has acted as both support and resistance in the recent past. Therefore, a decisive break above this level is a very important sign that the previous support has turned into resistance and could indicate a significant upward price movement. Conversely, a drop below the $170 to $180 support area could indicate continued downward pressure and potentially trigger a much more extended decline. The next few days will be critical in determining whether the price consolidates around the $200 level or pushes beyond it. The 15-minute chart will help you identify short-term trading opportunities, but the daily and one-hour charts paint the larger picture. A bullish indicator would be a surge in volume accompanying a price breakout above $200, signaling strong buyer conviction. In summary, the current news regarding Tesla is a mixed bag, with some bearish and some bullish sentiment. The charts reflect this uncertainty, but they also reveal potential key price levels. The $170 to $180 range appears to be providing crucial short-term support for Tesla. Breaking above the $200 resistance level with significant volume could signal a bullish trend. However, falling below $170 to $180 could signal further declines. In the short term, investors must keep a very close watch on volume changes along with price movements around the $200 level for clear signals. In the long term, it's too early to determine the overall trend definitively, making this a risky but potentially rewarding investment.